Hello and welcome. Just me today, and I'm going to be discussing with you guys SMT concepts, also known as SMT divergence, and also known as smart money technique. Now, getting straight into it, smart money technique, SMT, as I like to call it, is simply where you have two correlating pairs, such as the Nasdaq and the S&P 500, that do not correlate. So when you see the SMT pattern occur, it is an indicator to you that there may be a reversal happening. So, what does this look like? So, we have here on the left-hand side the Nasdaq, and here on the right-hand side we have the S&P 500. Now, an SMT occurs when, like I said, there is a breaking correlation. Now, what this looks like is simply this. So, for example, as you can see on the, I'll try and move this over actually, make it a bit easier for you. So, this looks like this. So as you can see on the Nasdaq, we swept this low, whereas on the S&P 500, we did not. So this is your SMT. So the SMT is where you have the breaking correlation where the pairs do not correlate in their price action. So where one makes a lower low and another doesn't, that is an SMT. So spotting these SMTs, what you would do is you'd look for lows, highs or lows, or key areas for reversals to occur off. So I do have an example prepared, as you may see here, just in the bottom left. These areas can be obviously fair value gaps. So for example, a BISI like I've drawn on, or you can have a previous low. So for example, let's say you have this previous low here that both pairs have just taken. So there you go. You have both pairs just taken a low. Or let's say on the ES, it's just a bit lower. So you're looking to take a trade of one or the other. Now, NASDAQ sweeps this low, forms an SMT off, and starts to reverse. Now, if you're trading ES, let's say, and you see the NASDAQ has swept this low, and then it forms an SMT before ES has taken it, this may highlight to you the price is not going to come and take that low, and it's in fact going to reverse before sweeping the low. So, for example, if you saw this on the NASDAQ, it swept this low, and then you see on the ES it hasn't, and it's formed this SMT, and it's reversing, you can look to get in. So let's say you were longing, you could be taking this sort of position. But likewise, if you were shorting, so if you were selling down, and let's say your target was this low, but you've seen that NASDAQ, obviously with the same correlation in them being the same pairs, expecting the same price action, seeing this SMT form, you have a valid reason to close your trade because you know the liquidity has been taken on the NASDAQ. So let's say your target's here, you see this SMT form, you can then look, okay, I've seen the SMT, I'm going to close at this point. That is now my new point position to take my profits. So SMTs, they are an addition to your model. So SMTs add confluence to whatever you're looking for. So let's say you are looking to buy off this level, off this low, let's say. Let's say this is Asia low, if anything. So you see Asia low is swept on the Nasdaq. You see ES quite hasn't taken it, but then you see this SMT form. Now, not only are you already looking for your reversal off this point, so when you do see the SMT and the reversal, you can then look to go long with the addition of the SMT, with that additional concept, because an SMT is a confluence. So when you use the SMT, it provides you that extra tool to be getting into position. So again, this let's say it's Asia low, you come down, you see the SMT form. Now you could be confident in getting on this leg here because you are already looking for a buy position at this level, or you could enter on a retracement on the next leg on the BOS, the breaker structure. Well, this is obviously hasn't market structure shifted, but there you go. In that instance, the breaker structure. So hopefully that explains SMTs to you. So SMTs can also work in the form. Now I know I've just removed my chart. However, I will do it again. So SMTs can also work in the form of entering or retracing into a fair value gap. So let's say this formed a fair value gap here. Now, again, let's just treat that as the NASDAQ. Now let's say it's the S&P. So let's say you have a fair value gap on both pairs. Now, the SMT still applies in this aspect. So you have your fair value gap. NASDAQ has come down and it retraced into this fair value gap, potentially even after it's done an SMT. Let's just say maybe it's SMT'd taking a low. So it's taken a low. Maybe ES hasn't taken a low, something like this. Yeah. So when you see this SMT off the low, or just a generic sweep anyway, some form of reversal is the point. And then you both have them form a fair value gap, but NASDAQ is the only one that retraces into the fair value gap. You can treat this as an SMT. So again, it's the same concept. It's all about the breaking correlation. So when these pairs are meant to be correlating and you see that they are not correlating, that is an indication to you to expect a reversal. Simple as. Now, a couple of pairs you can use for SMTs aren't just the NASDAQ and the S&P 500. They can be the likes of GBP USD and Euro USD. Basically, any pairs that are closely correlating. So, for example, Forex, you're looking at USD and, like I said, GBP or Euro. And for the likes of gold, you can be looking at gold and Dixie, so the dollar index, or you can be looking at gold and silver. And even with the pairs I've just mentioned, as you can see on the screen, you don't just have to use the S&P and NASDAQ. You can use the S&P and Dow, because they're all basically correlating pairs. They're all the same markets in essence. So that should explain SMTs to you. You're looking for a breaking correlation. So a way of helping you spot them is you have, for example, this low, which you can't see. I know it's not there. You have these areas marked out prior or you're aware of them. So when you see one pair take them and the other doesn't, you're already aware and potentially looking for this SMT. You're not just caught by surprise. So an example actually that I do have ready is I have this 5 minute SIBI down here drawn on. We're on the 1 minute time frame for this back testing here. Bearing in mind, completely transparent, you guys, I did go through this back testing session to find a good example. So obviously the idea is I'm trying to teach you here. I'm not trying to say I've just found this by chance on my first back testing session. Okay. Oh, I just deleted the 5 minute. There we go. So this is, I'm going to show you the silver bullet window, the London silver bullet for the NASDAQ, which I trade the NASDAQ silver bullet. I'm going to quickly show you a nice SMT. So without further ado, like I said, you have your previous areas marked out. So if I'm wanting to trade a buy off this level, I want to see a nice reaction to it. I'm not necessarily saying I want to see one pair tap it and not the other. I just want to see a reversal occur, SMT or not. So what I'm going to do is obviously going to let price play out, do its thing. Lovely, lovely jubbly. So there's no SMTs at this point. Again, I'm looking to buy off this level because we're in a bullish trend now. And there we go. We're about to tap in. So we've just tapped the 5 minute fair value gaps on both pairs. So good. Now I'm looking for a reversal. So yes, I could initially enter off this. However, I'm going to wait for more conviction, more confidence for my position. And let's see what price does. So now what do we see? I'll make the chart a bit bigger. We have, in fact, an SMT. And why do we have an SMT? We have an SMT because the S&P has dropped below this low. It's just lagging. Give me 1 second. There we go. So there is our SMT. So now like I said before, I was looking for a reversal off this level. I now have an SMT to add to what I'm already looking for. I can then play a few more candles and then look to get in. So there we have it. So there's your SMT, like I said, just adjust it there. So this low, NASDAQ has not made a lower low. It's made a higher low. The S&P has made a lower low. So like I said, gonna place my entry because I was looking to buy off here like this. Let's just go for 2R, consistent 2Rs. Let's say I could probably target this high, but for the sake of this back testing, I'm gonna go for this. So simply place. I could trail my entry. I'm not going to, just for the sake of this. There we go, we're tagged in. And there you have it. I'm obviously about to go and hit take profit. There we go. Cool. So that is how you use SMTs. You have key levels, highs, lows, fair value gaps, areas of resistance, however you trade. SMTs, you use them as a confluence, as an addition to your model, to how you're trading. So SMTs should provide you with quite good confluence because it's almost like having another pair to trade with. They are giving you more information. So a good little example is SMTs can actually happen quite frequently. So, for example, we actually have an SMT right here at the start of the silver bullet with this low. So, if you were wanting to buy here, you could have. Obviously, we didn't get any move out of it, but SMTs occur frequently. You just have to understand which SMTs you're going to be taking and which ones apply with your analysis. So, you want the conviction behind the SMTs you're taking. So, again, there was an SMT on this high here. So, again, showing you they do occur everywhere. It's all about the conviction you have, your analysis, and what you're looking for. Because obviously there's always two sides to the market. So this SMT would have, of course, brought sellers in the market. They would have been looking to continue this sell down potentially, and they would be selling there because they had an SMT. So obviously it's all about the context behind how you're using them. So previous highs, lows, fair value gaps, key areas. But yeah, SMTs are a great addition to your trading. Now, whenever I find an SMT trading the silver bullet, it actually gives me quite a lot of confidence that my position is going to go my way. So let's just see this play out. Now, obviously, like I said, I could have targeted the high, and in this case, I didn't. So I'm potentially just saving myself from a loss there. But let's see if it gives us any other SMTs anyway. For example, I'm just thinking off this high, maybe it will. So, for example, here, that gave an SMT right there. I know the chart's still moving, but an SMT right there. So that SMT, because that's quite a strong displacement down after that, and you got fair value gap here, this SMT would give you confidence to see, okay, price is potentially going to sell off here. So that should be enough for you guys to understand how SMTs work, how to use them and apply them in your trading. Again, as we like to always say, the best way to truly understand SMTs and apply them is to go into the market yourself and go do some back testing, forward testing, however you want to go about it. Draw them on, test them for yourself, and see how they work, see how they apply, and do they align with your models that you're looking for? Are you trading any pairs that you can find an SMT on? There's another thing. So, for example, right now, as I was saying, before we've now on the S&P come above this high. So we are now in an SMT, we're not in correlation. So if I was to see a potential sell off, then there's valid reason for that. So let's say I want to sell. I don't trade like this at all. I just trade the silver bullet and we're done. But here you may be able to see firsthand why you could expect price to sell off and you could be looking to short. So keep going, keep going. There you have it. So there's a great example live. I didn't even go this far when I was back testing. I literally just checked the window. And that was a good example. And there you have it. So yeah, a great perfect example. I didn't pre-prepare. You have this SMT on the high. Like I said, I was interested in this high potentially being an SMT. So let's say I did target the high. Let's say I was targeting the high, going for a 5.9R, and then I see, yes, I swept the high. I see this SMT form. I could then look to close my position, couldn't I? So that's the high right there. So seeing that happen, obviously I'll drag this across. See, ES has swept the high. I see Naz has done that. It's an SMT. I'm not liking it. Cool. I could close my position all the way over here. And then again, if you were potentially trading just the London silver bullet, not London silver bullet, sorry. If you're just trading an open window, let's say you're just trading from the London start to the New York open, New York close, apologies. Then obviously at this point in time, you could be shorting. You've seen the SMT off the high, and you could be getting a short. Now, you don't always need to be getting in positions, of course. You don't need to use SMTs as reasons to get in. It can just help you have analysis. So let's say you were to jump on at New York. So obviously this is in UK time. So let's say you jump in New York, you see this SMT in the high. Potentially that's either going to be a target or it's going to give you a reading for your session. So you're going to see that In London, we failed to break the high, we had an SMT and we sold off, potentially looking to continue that in New York because we understand that Asia typically accumulates, London manipulates, New York distributes. And if London doesn't, then New York manipulates and then continues. So obviously applying a load and load of concepts from ICT himself, you can use the SMT as just another one to help you with your trading from analyzing to securing profits to getting in trades. There's a variety of things you can use it for, as I've said. So right there should have been a good example. I keep seeing more. But again, here's actually another SMT. So NAS is now below this low and ES isn't. So they happen everywhere and frequently. So you shouldn't have an issue with applying them. Best bet is even if you don't trade the NASDAQ and the S&P, is just jump on a chart like this, put them both up, and just go compare them and just go see how easy it is to spot them. Um, and yeah, apply them and then just pretend like you're going to frame some trades off them. And if you're not trading NASDAQ or the S&P, let's say you trade in GBP USD, like I said, I know it's an easy one for me to say. Check it with your USD, see how frequently you get in these SMTs. Whatever pairs you trade, search to see if you can have a correlating pair, and then look for SMTs because it's a very simple addition to your trading, and it adds just another level of confidence. So, if you do have any questions about SMTs and how to frame them or anything else that maybe you feel like I've not covered, then do let me know. Of course, it does not take a lot for me to answer them and get back to you in another video, of course. So, yeah, hopefully this helps you guys. And I look forward to seeing potentially some trades you've applied SMTs to. And yeah, hope you liked it. So, have a great day, whatever time you're watching this. Have a great morning, evening, great week, happy weekend. Peace out. Thank you. Goodbye.